So, tax time is here again. 'Tis the season. We've gone around the sun one more time, and now we have to send in our information to Uncle Sam. And I want to talk about something that happens every year in my firm. Inevitably, we will get people coming through the door. They're needing help with their taxes. We'll talk through their situation a little bit, and then we'll get to the proposal process. And sometimes there's a little bit of sticker shock. Someone goes, "Why the heck are you charging me $1,000 for a tax return when I can go down the street and get that same return for $300?" Well, obviously, the assumption there is that you're getting the same return for $300. But there is a big difference between a $300 tax return and a $1,000 tax return. I wanted to break down the differences to those in today's video. For those of you that don't know me, I'm Dave Lewis. I'm a certified public accountant and the owner of Impact CPA. We're a full service accounting and tax firm helping small business owners grow the business of their dreams and pay the least amount in taxes possible while doing it. So let's jump right in. What is the difference between a $300 return and a $1,000 tax return? Well, let's talk about what the tax return is and what it isn't. First, a tax return is just a report of what happened financially in a year that you send to whatever taxing authorities you happen to be underneath of. So the IRS, your state tax commissions, what have you. So it's just a report. Tells the IRS what you made and what you're going to owe in taxes. But it's also a risk document because once you file it, you're signing off that it's complete and that it's correct. So when you're paying for a tax return, you're not just paying for paperwork. You're paying for how much happens before and around that paperwork. So let's talk about the $300 return first. And to be clear, I'm not saying it's always bad. For some people, it's a good fit. If you just have a couple of W-2s, some children at home that qualify for the child tax credit, simple government forms, that $300 firm may be for you. Or one of the big box, TurboTax, H&R Block, it might work just fine for you. Note that there's still some tax planning that can be done before the tax filing due date that they're not going to make you aware of. So for a $300 tax return, we're talking about a firm that is focused on high volume. So the goal is to file and file fast. Get it done, get it out the door, get as many tax returns in as possible during tax season. The intake's going to be minimal. You're going to upload your documents, you're going to answer a couple of questions, and that's often the extent of it. There's going to be little to no analysis done on the return if you miss something or something's categorized wrong. It might not be caught because nobody has the time to actually go digging through it. And the review is probably going to be limited as well, if there is any review at all. So that's going to be focused on, did we pass all the software system checks? Did we get rid of all the flags there? So at the end of the day, the return might be filed, but it may not be filed thoughtfully. And the danger is when they filled out the forms, it reflects what went in, whether it's clean or completely chaotic. So, for example, if you've got a small side hustle on a Schedule C, maybe some things got missed on there. Maybe there are deductions that you qualify for that weren't caught that could save you a heck of a lot more than the $700 extra that you had to pay our firm. And you would never know because nobody asked a single question. So here's where the $300 return will often cost you more later. You're going to see problems with potentially missed deductions because, again, no one asked follow-up questions, wrong classifications or deductions, maybe deductions you weren't allowed to take that put you at an increased audit risk. Messy books feeding into a return. We see that all the time. There is often a lot of cleanup that has to go into books to have them be tax return ready. And of course, the big one, you're not going to get any proactive advice with your return. It is purely plug and chug. You're going to give them whatever you have. They're going to produce you a set of tax forms, and you're going to be out the door. Now, the $1,000 tax return, that's a little bit different. It is a quality first model. So at this level, you're paying for a system. You are not just paying for a set of government forms. You're going to have a quality intake. It's not just upload your stuff and we'll get it done. We are going to review everything that you upload and understand what changed with your situation this year. Are there any new sources of income Did your business activity change? Did you have major purchases? Did you have differences in estimated payments? Did you have retirement contributions? Do you have loss carryovers? Those often get missed when going from place to place. We do a thorough analysis. Does everything in your books tie out? Does it tie to the last year's tax return? Do the expenses look reasonable for the type of business that you're in? And is everything optimized? Especially, did you forget something? There are always deductions that people forget about. So we're going to look for those. And just by reducing those mistakes and asking the right questions, we are often going to save you far more than you would have made by just going with the bargain offer. There's a quality review process. We're going to look for consistency, accuracy, all the support in the documentations. Everything has to tick and tie correctly. And finally, there's going to be that personal touch. You're not just going to go into the void, into some queue, and get matched with whatever preparer is most available that day. I mean, this happens especially with the big box guys, right? So you're going to go sit down at the desk, you're going to get whoever you're going to get, and you're going to get your paperwork. So we're here for the personal touch. We're going to ask things as human beings because we care about you and we care about your position. Things like, should I be an S Corp next year? Are we getting hit with too much self-employment taxes? Are there options for structuring differently? How much should I set aside for taxes, for making estimated payments? How should I pay myself as a business owner correctly and to make sure I'm minimizing taxes? And of course, just the simple, okay, we had a big tax hit this year. What can we do to help minimize that next year? So what's the right answer? And it really depends on your personal situation. So a $300 return, that's probably right for, like I mentioned, simple W-2, maybe some interest forms, no major changes year to year, no business activities, no rental activities, no capital gains, no selling stock options, things like that. But if you've got self-employment income, you run a business, you have multiple streams of income, rental properties, stock activity, anything that might add a layer of complexity, it's worth having someone with an expert eye check it out. The cheaper option is cheaper for a reason. And we've all heard that. You get what you pay for. So at the end of the day, the difference between a $300 tax return and a $1,000 one isn't the forms. The forms are all the same. The difference is someone just plugging numbers or is someone doing actual tax work? So if you want help with the quality tax return this season, a proper intake, an analysis, review, and real advisory, feel free to reach out. And if you found this video helpful, please like and subscribe. It definitely helps our channel. And comment and text down below. I'll make a follow-up video on the most common mistakes I see in budget-done tax returns. All right. Thanks so much, everyone. I've been Dave Lewis with Impact CPA. We're trusted advisors driving impactful outcomes. Have a wonderful day.